Hi everyone, I'm Jason and welcome to this Real World Finance channel. I'm going to put my bio in the description for this video so you can see who I am and what my background is. But I'm going to go right into this video where we're going to talk about buying your first house. And what I'm going to do is review a series of videos that I found with tips, tricks, experience from others in regards to buying your first house. And I'm going to give my own comments to those videos, so hopefully you can get double the content, double the value. So let's get right into the first video.
So how did I actually save up enough money to buy a house? So I actually got my first full-time job about 1 year before I went under contract to buy my house. So I was working full-time for about 1 year before I was actually able to have enough money to purchase a home. At that time, I only made about $58,000 a year. And then I also did work at a cycling studio just for fun in the mornings right before work, and then after work, which I made $12 an hour there. I've always really been a big saver and really tried to prioritize finding different ways that I could make a little bit of extra income, and then really trying to push myself to save around 40 to 50% of my salary, which every month I really try to push for. And then I just created a super simple spreadsheet where I actually put the amount of money and like the goal that I had for every single month and made sure that I was hitting those numbers every single month. Also just really tried to minimize the amount of spending that I did within all different types of categories in my life. So I wouldn't buy new clothes all of the time. I wouldn't be buying new things all of the time. One thing that I feel like really helped me focusing on was my living expenses. I found an apartment that was super cheap, a really old bedroom, one bathroom apartment for $950 a month, which included utilities. So just having that place was super nice because it allowed me to save a lot more money to go towards the home that I wanted in the future. Honestly, just keeping it super simple of trying to do everything I can to increase how much I was getting paid, and then also just making sure that I was hitting those savings goals and not spending money on things that I shouldn't be spending money on really helped me. I know it's nothing crazy, but I feel like just doing simple things every single day will take you to, and having the patience will take you to being able to accomplish these types of goals.
So that's a really good video, and I like it because it's not just about buying a house. She really incorporated a lot of personal finance and how having good personal finance skills and consistently following these patterns of maximizing your revenue, your income, and while minimizing your expenses and keeping things organized, keeping yourself accountable. And I really like that first point, which was about the fact that she spent many months, I think she said about a year, to save up enough for the cost. So obviously she was thinking way in advance about what it was going to cost, and these other videos are going to show that as well, what the costs really are when it comes to buying your first house, and how you have to be disciplined way before you wind up actually looking at houses and actually making that purchase. I'm just going to go ahead and pause this one because it's just the text here. It's the 9 things to remember when buying your first house. And the first one is, it's not your forever home. What you're going to find as I comment on these videos, some things I agree with, some things I don't. So I'm going to try to keep it real. And based on our own experience between my wife and I, we've bought many properties, many single family homes, as well as multifamily properties and commercial. But in regards to single family homes, yeah, we started off with that like most people. And it's not your forever home. I would say that's probably true for most people. But it's also, you have to consider the fact that with the current economy, with the interest rates where they are, with inflation and a lot of other factors that go into personal finance, to say it's not your forever home, you know what? It may not be your forever home, but for some people, they may be in this first home for 10 years, 15 years, or maybe forever. You never know. So I don't know, kind of take that one with a grain of salt. It's not your forever home. It may or may not be. So number 2, don't rush any improvements. That's kind of a generalization as well. there's some improvements that you absolutely have to do when you buy your first home. When you see the house and actually live in it for the first time, you start to really see the things that maybe didn't show up at the inspection, didn't show up at the walkthrough. So there are some things you might have to rush through, but I think the point to getting to there is that you gotta pace yourself. You got to take what capital you have available, and you just got to be smart about what investments you're going to make, what improvements, and prioritize those. So number 3, paint goes a long way. I 100% agree with that. A fresh coat, you may have heard of that. The fresh coat of paint can really do wonders and really brighten up a home, and can fix a lot of things. So painting goes a long way. Number 4, your mortgage payment gets easier to pay over time. I'm not sure what they're talking about there. The payment itself, again, with the current economy, as inflation goes up, and if your mortgage payment is the same, but inflation is going up and your income is not going up, then does that make your mortgage payment easier to pay over time? Again, I think that's a generality that doesn't apply to everyone. Number 5, there's no perfect house. I guess that's very subjective, right? For some people, a very small 2-bedroom, 1-bath home could be the perfect house for them. So, and even if the fireplace doesn't work so well, hey, the fact is that they have their own place to live and they're not renting. So for some people, that is their perfect house. So that's a little subjective. Number 6, get to know your neighbors immediately. I'd say that's good if you get to know your neighbors. It depends on the environment, right? If you're in an HOA or a not HOA, some people don't want to get to know their neighbors. I think it's probably good to know them by name and be able to wave and say hello to them. Some people don't want neighbors knowing all their business, and some people want to be best friends. So that's pretty subjective as well. Number 7, it's okay to move if life changes. I agree, sure, if you have to. Knowing that if you do move, if you get a new house, then you resume and restart the process. So, and there's a lot of costs involved in that. So, but if there's life changes, then there's life changes. Let's see, number 8, don't over improve for the neighborhood. I guess that's going with the saying is you never want to have the nicest house in the neighborhood. You want to have a great neighborhood and have a house in the middle or on the bottom half of the neighborhood. That way, the neighborhood and the other homes, if you decide to sell the home at some point, then the property value will be higher because of the neighborhood that you're in. I think that's what they're getting at. Don't over improve for the neighborhood. And number 9, buy as soon as you can. I think that too is kind of the old adage that, hey, it's probably better to buy and earn equity than to rent. I think that's where they're getting at there. Just remember that a lot of people who are in that position, that may be you, and you are renting and you're saying, hey, you know what, I can take my $1,200 a month rent and I can have a mortgage for that, and I'm gaining equity. Well, you don't forget there's also a lot of other costs involved with home ownership, so it's not a apples to apples change. So something to consider. So a lot of these I think are generalities, and it's good to keep that in mind as you see videos like this. So let's move on to the next one.
Here are 3 tips for first-time home buyers. Tip number 1, always be pre-approved before you start looking. You don't want to find your dream house and find out you just don't qualify for it. Tip number 2, always get a home inspection. You never know what the house looks like from the inside. And tip number 3, find a real estate agent you feel comfortable with and trust fully.
That's a good set of tips, especially the first one is getting pre-approved. You want to know what you can afford way before you're actually going and looking. There's nothing worse than then going on to Zillow yourself or Realtor.com or Redfin and then finding the perfect house for you. Again, that's very subjective, and deciding that's it, that's the one we want, and then buying that first house is a lot more emotional in general, an experience than subsequent homes. So there's nothing worse than finding that home and then after a long process you find out that you just can't afford it. That if you need a loan, that a bank will not loan it to you because of various reasons, will not loan you what you need. So that's very important to keep that in mind, especially that first tip. So that's really important what she says about getting a home inspection and getting a good real estate agent. Specifically on the inspection, if you're in what's called a seller's market where maybe the supply is low, the demand is really high, and you're one of many buyers, you might be tempted to say, hey, I'm just going to forego the inspection, and you think, oh, I'm going to look much more attractive to the seller, so the seller might take my offer over someone else because I'm not interested in doing an inspection. I don't need to have one. Well, that could backfire really quickly, because then you're just relying on your own eyes as you do the walkthroughs, and you're not getting onto that roof, you're not climbing into the attic, you're not testing the AC and heat systems, you're not doing a lot of things that you really should. So definitely not foregoing the home inspection, making sure you do that, and having a good agent to guide you through this whole process.
Here are the top 3 mistakes first-time home buyers make when they're purchasing their house. The first is not having enough money for your down payment or closing costs. Yes, there are a lot of programs that can help with your down payment. And yes, some of my clients have came to the table with no money out of pocket. But the chances of that happening to you are very slim. It depends on the deal. It depends on the situation, the type of loan you use, your credit, etc. And on top of that, you still have things that you have to pay for, such as your home inspection, appraisal, and earnest money deposit. Second mistake.
So I'll definitely agree with that first mistake, is not having enough money for the for the down payment and the closing costs, as well as those things you mentioned, like inspection and appraisal and such. Yeah, if you have a good agent, then you really shouldn't be surprised. You really would know way in advance if you have enough money for all those things. And as you get closer to the closing, you will get what's called a closing disclosure or a loan estimate. And that's your chance to see all of these costs written down on paper. So it really should not be a surprise, and you really should know way in advance whether you're going to have the cash to close. So if that is a mistake that's happening towards the end at the time of closing, then I think someone really didn't help you along the way, whether it's the agent or it's the closing agent, your real estate agent or the closing agent, or something just went wrong there. You really should not have that mistake happening. So
the second mistake I see people making is that they're trying to time the market to get a specific interest rate, which is virtually impossible. Interest rates, they change daily. From the time you're pre-approved to the time you actually find a house, your interest rate can change to your benefit or against your benefit. On top of that, every single person is waiting for interest rates to drop. Once that happens, it's going to be a madhouse in the market. You're going to be competing against 30 other people for the same property. So what benefit is that to you? The true benefit comes from owning the asset. Once you own the property, you can time the market, because once rates go down, you can definitely go ahead and refinance.
okay, I definitely want to stop on that one. So 100% agreed that you cannot time the interest rate changes. When the Fed decides what they're going to change every time they meet, then the market reacts, the banks react, and then the interest rates for the mortgages adjust. So right now it is July of 2024, and interest rates, there's talk of them maybe decreasing, but this goes at any time in history that you never know what's going to happen with interest rates. So definitely agreed with that part, that you can't really time yourself. All you could really do is know what the interest rate is now, what is the interest rate, and what is the loan you can get, and deciding right now, can you afford it or not based on your numbers. The second part, though, he says, is that you can always refinance when interest rates are better. And cautionary tale on that, not necessarily. You can't always finance. When it comes to real estate investing, I'm always cautious whenever there are any absolutes thrown my way, and I just, I always am very conservative about that. So when the interest rates do decrease, well, you still have to qualify for a refinance. You're basically getting a whole new loan, right? So they're going to look at your income at that time. They're going to look at what that interest rate is, and they're going to look at your other debts at the time. So you could be in a very different situation, even though the interest rates maybe drop from 7% to 4%, hypothetically. You may or may not qualify because maybe your employment changed. Maybe you had some major expenses. Maybe you had some major medical expenses, and all of a sudden your debt has skyrocketed. You have no idea. So real caveat on that, real cautionary tale that, hey, you can always, you'll be able to change when your interest rate and refinance. That's not necessarily true. Just keeping that in mind. So.
The third mistake I see home buyers make is that they think everything on the inspection item is a huge issue, and it's not. And to expect a seller to replace or repair every single thing on that item is a huge ask. You're not buying a new house. Things are going to be found. And we have to manage expectations there from what is major to what isn't as major. And we're going to negotiate on your behalf, of course, but to expect the seller to fix everything, again, is a huge ask.
Okay, so that last one, it's a huge ask to expect the seller to fix everything on the inspection. So it all depends on what the market is like again. If you're in a market where all of a sudden the supply of homes has increased significantly and a lot of sellers just decide they're going to start selling their homes, and if the interest rates are high and there's not very many buyers because a lot of buyers cannot qualify for loans, then the supply and demand is imbalanced, and if there's way more supply and not enough demand for those homes, then you, as one of those pre-approved borrowers and pre-approved home buyers, if you're one of the few, then that becomes very much a buyer's market, and you can expect more in regards to things to be repaired on inspection by the seller. Either they repair items or they give you a credit or something. I think if a real estate agent told me that, don't expect, your expectations are too high. Don't expect all these things to get fixed. It's an old house. I would just walk away right there. And this is probably why I've had real estate agents before, and I decided, you know what, I'm going to get my own real estate license, not to buy and sell properties for anybody, but more to represent myself, because no one's going to represent me better than myself. So I went and got my license, and I represented myself in the last couple single-family homes that we've bought. And instead of getting the three or four homes to look at and then deciding, oh, which one do you like? No. We looked at about 20 to 30 homes before we found this one that we're living in now. So it's like that previous person said, getting a good real estate agent, you got to be really critical. A good real estate agent isn't necessarily the person that's the nicest person to you, or the one that drives the nicest car or has the nicest office. No, you got to get a good sense, is this person really working on your behalf?
If you want to buy a house instead of moving to an apartment, listen up. I'm going to tell you exactly what to do. I bought my first house when I was 23 years old, which was about a year and a half ago now. I'm 24 now. So I'm going to tell y'all the exact steps I did to buy my first house. Very first thing you need to do, step one, you need to get in contact with a mortgage lender. They are the expert. They are the one who's going to look at your situation, where you're at financially, what job you have, how much money you have saved up, your credit score, everything. And they're going to tell you exactly what you need to work on doing in order to get set up to buy a house. All you need to do is Google mortgage lenders near me and then literally call a couple of them. Do not go with the first one and see which one you like. Step number 2, in order to buy a house, you have to have a certain credit score. You have to have a certain amount of money saved up. You have to have a low debt to income ratio, and you have to have job verification. And the mortgage lender is going to tell you all of those things. So step 2 is get to work. The things that you do not have yet or have not met the requirement, those are the things you need to start working on. Now, these things are not going to happen overnight. That's what you need to understand. But if you start today working on these things, it will happen. And let me tell you why buying a house at a young age is way smarter than moving into an apartment and paying rent. When you are young like me, you start immediately building equity as soon as you buy a house. When you rent an apartment, you are literally building someone else's equity. Literally all you're doing is paying someone else's mortgage. Now, there's pros and cons to renting and owning, but again, in my opinion, owning a house is way smarter.
So I really like this one. This young lady, first of all, she is a wealth of knowledge, as you can tell already, a lot of experience already, but also she has this this tough love type of approach. And if you're buying your first house, you're very fortunate if you have someone like her on your side, like a family member, someone that's going to tell it to you like it is, like making sure you're learning to be pre-approved and talking to the right lender, like she says, and get to work. And that's really important, is getting to know what your real financial situation is, and are you really ready to buy that first house? This is that tough love approach. Someone telling you, you know what, you're not ready. You're financially, you are not ready, and if you try to do it, and if for whatever reason the bank loans you that mortgage, and you get in there and you have no reserves and you have all sorts of other payments for other things like credit cards and such, in the event that someone lends you that, then you don't want to learn on the back end that you were not ready. You want to learn it on the front end. And so that's a really good point that she made. And then she talked about the renting versus buying, and her opinion is that it's always better to start building equity early on. That is exactly right. You got to be ready, you got to be prepared, and you got to know what you're doing before you take that step. And yes, if the answer is yes, you are prepared. Yes, your finances are in order, and you have a really good mortgage lender that you're working with, who's telling you that your finances are in order, then yes, it's a better option to purchase than to rent. I definitely agree with that. You're building equity, and you're not paying someone else's mortgage. You're paying your own, but that's only because you're ready to do it. So that's a really good video. Very smart young lady there. So, all right, let me see what else we got.
Bought a house. Here are 3 things that I don't like about owning my home. Number 1 is maintenance on stupid stuff. One of those is cleaning out my garage. Today I spent my entire Sunday vacuuming up the garage, taking everything out, dusting off the cobwebs. Mice and insects are another thing that I don't like about owning a home. A couple months ago, we were cleaning up the house, and I remember seeing these like little grains that I thought were little grains of rice, and I asked my fiance, what is this? Like, what do you think this is from? And he's like, oh my God, that's mouse poop. Every drawer, even where our clothes were, like in the kitchen, everywhere we found mouse poop. I hate mice. I literally hate mice. And I had to disinfect everything that had been touched by poop. Finally, if something breaks, it's my fault. In April of this year, our dishwasher broke. Turns out the motor on the dishwasher went bad, even though we had only bought the house 2 years ago. So then we just ended up calling Samsung. They had to send somebody out here. It really disrupted my work schedule. I had to be home for a couple days while this guy came. He had to come out and inspect it. Then he had to buy the part. It ended up costing us like $350. $350 is a lot of money that it could have set us back if we weren't prepared. Overall, I love my home. But there's definitely some parts about home ownership that nobody talks about online that is still important to know, especially if you're in your 20s, if you're post-grad, and you're thinking about buying a house in the near future.
Great. So that summarizes a lot of things we've been talking about. There's a lot to home ownership after you make that purchase, and a lot of it you learn along the way. So I like the fact that she says that she loves her home, and that's great. And I think most homeowners will say that they're glad they have their own home. We certainly felt that way. But just just the moral of the story is just be ready for expenses and work that on that home that you're just not expecting, that if you've been renting this whole time, that you never really thought about, and now there's no landlord to call. You are your own landlord, essentially. You are responsible for it, and you got to maintain the home to make sure it's a good place for you and your family to live in, and there's a safety issue there, right? Like she's talking about rodents and such. There's a health standard there, but also you want to maintain it because you want to be there for however long it is you intend to live there. So you definitely want to keep in mind those additional items after you purchase.
Here are 3 things that you need to do if you want to buy a house in 2024. And if you're new here, my name is Theoni the Lender. I have been a lender, especially a lender for people from TikTok for like 8 or 9 years now. So listen up. The first thing you want to do is make sure that your credit score doesn't suck. You can't do anything without a good credit score. And when I say a good credit score, the minimum requirement is 620. You're going to hear 580 is what FHA allows, and that's true, but you would need like way more money and your interest rate would be way high for it. So get it above a 620. Anything above a 760, you're always going to get the best rate in the market. The second thing is to start eliminating really high monthly payment debts. I've said this in so many other videos, but it is so much easier to buy the house first and then buy the car, because when you buy a car, they don't look at your monthly debts, but when you buy a house, they do look at your monthly debts, and the average monthly debt for a car is like $1,000 a month. And so that eliminates your purchasing power on a mortgage payment by like $1,000. So if you can eliminate those higher payments that you pay monthly or refinance them, get them lower, whatever it is, then your qualifying and your purchase power is going to be much higher. Not that you have to use your absolute maximum that you're approved for, but it is nice to have that if you want to. And just a pro tip, we calculate something called a debt to income ratio to figure out what and how much you are approved for. And the way we do that is we add up all of your monthly debts that show up on your credit report, plus the monthly mortgage payment on the house that you're gonna wanna buy. And then we wanna see that number you make 3 times more before they pull your taxes out. So let's say everything combined is $1,000 a month with your current debts and a monthly mortgage payment, then you need to be bringing home like $3,000. And lastly, you have to save a shit ton of money. Buying a house is not cheap. Buying your first house is pretty tough because there is some sacrificing that needs to happen. You have to cut out some sort of spending for maybe a year or 2 in order to come up with the savings for the down payment and the closing costs. People forget about closing costs. While closing costs are negotiable with the seller, it's not a bad idea to have the money, because if it's a competitive situation, that seller is never going to accept your offer if you're asking for closing costs and somebody who saved that extra 10 grand doesn't ask for. I always tell people to shoot for 20, 25, 30K maybe even, which I know sounds like a crazy number, but I've seen it done over the last 9 years, and you can do it if you really want to. The best part about saving that much is even if you don't use all of the money that you save to buy a house, then you can use it for like furniture or buying a house that you don't love the backyard in, but now you have a little bit of money to be able to fix it up to your liking.
So that was really good as well. This person, she mentioned she is a lender, mortgage lender, and again, a lot of personal finance and buying a new house, all of it coming together. And you really got to understand both. And what I got out of this video is because she's a lender, you really need to have a good team. A good team. Buying a new, especially a new house, buying a house is a team approach, a team sport. So you're talking about either the bank who's going to be lending to you, or a mortgage broker who's looking for a mortgage for you and looking at different banks. And then you have if you have a real estate agent, then you have to have a really good one. And then the person that's doing the inspection, person that's doing an appraisal, you have a lot of people involved in this decision making process that ultimately at the end will fall onto you as ultimately responsible for that purchase. Because you're the one that's going to have that mortgage, you're the one that's going to sign for it, and you're the one that that has to answer for it if you're unable to pay that mortgage amount. So when she talks about saving a lot of money and making sacrifices, yeah, 100%. That's what's involved in this process. So.
Now the big moment, you have the down payment, correct? Oh, yeah, all of it. Here you go, all 40,000. Great, seems to be in order. And you also have the closing costs, correct? I thought that was in the down payment. What's closing costs? Yes, the closing costs. That's the additional $12,000. What? The additional 12,000? There's 40, you have 40,000 dollars. I thought that was the closing costs. Well, okay, so I do see that you have your earnest money, your good faith money, so that was the 5,000. Then we also see the appraisal that you paid for and the inspection that you paid for. But on top of that, we also have the application fee, the title search fee, we have the recording fee, then we have the underwriting fee and the commissions, then the fee. Also see that you're only putting 10% down. With a conventional loan, we actually require 20%, but it's okay that you're putting 10% down. But because of that, we have to get mortgage insurance on top of your home insurance, even though it is $40,000 for your $400,000 home. We do require that we have the mortgage insurance as well. Right, and I'm sorry, just to make sure I'm understanding, even if I did do the 20% down, I would still have these $12,000 costs. It would be minus $100 for the mortgage insurance, but yes, around like the 12,000 cost, yeah. Okay. Oh no, everyone, when were you gonna tell me about this? When were you gonna mention $12,000? It is actually lined out in your loan estimate. You did sign that. Yes, indeed, I did sign that, but I thought that that was like all-encompassing 40,000, not an additional $12,000 when I'm okay. Right, exactly. So do you have the 12,000, correct? I have the 12,000, correct? No. Oh, okay. So I take it we are not clear to close today. The fuck do you think?
Okay, so that's a really, really fun one. And so the idea, the premise there is that they're at closing, at the table to do the signatures, and the buyer has no idea that there was a difference between the deposit, the down payment, and the multiple closing costs. Therefore, the cash to close is in this situation a lot more than she was expecting. That should never ever happen. I mean, this is very, I think it's more satire and it's more comedy. But if you're in that situation where you go to closing, I think I mentioned this earlier, if you go to closing and you didn't know exactly what you were paying on closing day, somebody really messed up. Somebody really did. So you got to know, and it's usually not the buyer, by the way. It's when I mentioned the team a little earlier, yeah, there are many points where that team is supposed to guide you and let you know about what's going to happen. One other member of the team I forgot to mention earlier is the title company or the closing agent, same thing. And they will be sending you these documents to say this is your down payment. These are the closing costs. These are the prepaid expenses. Add it all up. Here's what the bank is going to be preparing for you to fund your property on your behalf. And when you subtract that funding from from all of the costs, that ends up with the final cash to close. That's the key word for you, meaning that's what you have to bring on the closing day. And it's kind of a misnomer because no one brings, several $1,000s of cash in there. It's usually you've gone to the bank pretty quickly before the closing and you wire the funds. So this situation should never ever happen. But again, it's for you to remember that the actual cash to close is usually a significant amount, a lot more than the initial deposit that you were anticipating. So,
how much do you recommend having savings for the down payment for a $400,000 house? Here we go. I'm going to answer this in two ways. I'm going to tell you how much you need for a down payment, but I'm also going to advise on how much you should have in your bank after you purchase the home. The minimum down payment for a $400,000 house is going to be 3% conventional. This is a conventional first-time homebuyer's loan, and that's $12,000 for a $400,000 home. Now, if you've already bought a home and you don't want to go conventional, you can also go FHA, which is 3.5% down, which would be $14,000 for a down payment. You've also got to consider closing costs as a part of the cost of purchasing this home. A lot of first-time home buyers, not saying you are one, but if you are, they don't think about the fact that you also have closing costs on top of a down payment. If that's the case, you also want to have money for that, or I would suggest getting the seller to pay for that if that's an option in your market. And for a conventional first-time home buyer loan, you can get the seller to pay up to 3% of the purchase price. Now, secondly, I want to speak to how much you should have in your bank account after you close on the house. In the mortgage world, we call this reserves, and I'm going to agree with Dave Ramsey on this. I don't agree with him on a ton of stuff, but I do agree on having reserves. This is 6 months of all of your expenses in your bank account after you close on your house. So let's say you make $100,000 a year, that's $8,333 a month. Let's also say that 75% of that goes towards your expenses. So that's around $6,250 a month. So I would say have 6 months of those expenses in my bank account after you close on a home, which comes out to be around $37,500. This is not a requirement in the lending world, but this is just my own advice.
Okay, and that is very good advice as well. Now we're getting into more of the numbers. I did not want to create this video to deter anyone or discourage anyone. As I mentioned, my wife and I have bought many properties, many houses, and so definitely don't want to discourage anyone, but just to bring that awareness up that that you have to be prepared financially. You have a lot to think about. You have a lot of there's a lot of sacrifice involved, and a lot of personal finance and keeping your expenses down to have those reserves like he's talking about, because you never know what's going to happen. And once you're on the hook, once you have that mortgage and you're responsible, then you're the one that's going to be managing those issues. The last thing you want is to be caught later on, 6 months, a year after you bought the house, and then realizing you just don't have the finances to maintain it, let alone pay the mortgage. So don't want to deter anyone from purchasing a home. Just keeping those in mind is very important. Got one last video here, and I like this one a lot, so watch this one.
I think she put my soul sign. Is that my soul sign? Is that the soul sign? That's my soul sign. Yeah!
That was great, because don't forget there's there's a lot of joy in buying your first house, and I really like that video because it exemplifies that. Despite all of the stuff that we've talked about here and all the challenges you'll be facing and all of the responsibility that comes with it, it is very much a joy to buy your first house. So I hope these videos have been very enlightening. I hope that my comments have been helpful. This will be the first of many videos in regards to personal finance and real estate investing. So I definitely suggest that you leave a comment below if you agree or disagree with any of these comments that I've made. I'd be happy to hear from you. And if you like the video, that would be appreciated to give us a like and subscribe to this channel. And I'll see you on the next video.